it will help you do things that could set you up eventually on the other side of the crisis. And there's the old saying that you have huge opportunities during crises. Thursday, May 13th, 2021, Monaco 64, home of alternative economics and contrarian views. I get a lot of questions from the viewers about what would happen if there were to be a currency collapse, a dollar collapse. How would silver and gold as well be useful in such a scenario? And before I start, I like to say that the hope, of course, is that the powers that be come to their senses and rein in the inflation they're creating. I don't have much hope for that, though, unfortunately. And some people might say, oh, they're not going to let it get to that point where money dies, so to speak, where we have a Weimar style situation, 1923, or a Zimbabwe style situation, or Venezuela. But if you look back at the last 14 months or so, and what the powers that be have put the world through, how they've traumatized people, how they've really scared people, hyping up something that, in my opinion, shouldn't have been hyped up. After what they've done this past 14 months, nothing for me is out of the realms of possibility for what these people are capable of doing. So unfortunately, what I'm going to talk about today probably has a much bigger chance of happening than it did maybe 2 years ago, even though I did 2 years ago point out that it was possible to have a currency collapse. And we've seen many countries, of course, and I lived and grew up in a country where you had currency collapses, but they were just fringe, on the fringe, they're on the periphery. So it was a process that could be fixed fairly easily. Of course, it did leave a lot of victims and has for generations. We have a lot of poverty, for example, in countries like Venezuela, Zimbabwe, Brazil. We have a few that own almost everything. And why is that? Because they were able to protect their savings in these periods of monetary mayhem in their countries, because they had dollars, they had hard assets. But one thing they didn't have in much quantity was the local currency in the bank. They kept enough for payment of their bills, and that's why I keep telling people, have some fiat currency if you want in a bank, but only enough to cover your costs, daily, weekly, monthly costs that you need. After that, you need to keep your savings, in my opinion, or your investments in hard assets, preferably. So what would happen then, let's say, if the dollar collapsed? Well, one thing that would happen is that hard assets would be for sale. Things would be for sale because people that hold on to these are this is a 10-pound note. I guess in the US you can think about a $10 or $20 note. People who hold on to these, they won't be able to buy anything. So if they hold or own anything that's fixed or hard, they're going to try to get rid of that as quickly as possible, as cheaply as possible. People are going to be desperate to buy food to survive. So hard assets, real things are going to be on sale. And if you have some silver, especially gold, gold is a little different, I would say. Gold is something that you need to keep very safe. That could be used for even bigger exchanges, for things that are even more valuable. But silver will help you barter or do some indirect exchange. You might still have to go through the fiat currency that is collapsing to get things. You might have to sell this for millions of this to get a loaf of bread. But you might be able with that to get 100 loaf of breads for this, because you might get many multiples of this. And we've seen that in countries like Zimbabwe. We've seen that in countries like Venezuela. People who have some kind of currency that is not the local currency have done well. So that's what would happen if the powers that be come to their senses. Does that mean that we need to get rid of our gold and silver? No, I don't think so, because the 70s and the early 1980 period showed that they came to their senses, and still gold and silver did what they were supposed to do. They reset the system. Gold went from $35 an ounce prior to 71 to almost 900 by 1980. So it did its job. Silver as well was, I don't know, under $2 an ounce, went up to 50. Yes, it came back down, but it did its job. Gold and silver did their job. But I have to say that I can't really tell you exactly what's going to happen. It's not going to be pretty. The other thing I would say, I'm not saying that gold and silver is going to save you or your family completely from anything, from everything, because it isn't. And as I said, I don't know what really is going to happen. We've never had a collapse of the reserve currency. So I don't have a crystal ball, but it will be quite traumatic. I think it will make last year, this year so far as well, so to speak, look like a picnic, unfortunately. But what gold and silver will do is maybe give you a little bit of an edge. I'm not promising the world. I'm not saying that gold and silver will help you. It will help you financially. It will help you do things that could set you up eventually on the other side of the crisis. And there's the old saying that you have huge opportunities during crises. And I think that's the way to look at it. And I can't tell each one of you what you can do with your silver or your gold during such a crisis, because all of you have different circumstances. All of you live in different places. I have viewers all over the world, not just the US or the UK. All of you have small or big families, or I don't know. All of you have a tight-knit community. Some of you live out in the middle of the countryside. Some of you live in the cities. It's going to be tough. You just use your common sense. But one thing is for sure. I think one of these is going to help you a lot. A little silver coin. A lot more than this. And just before I go and look at the markets and talk a little bit about the CPI number from yesterday, just want to recommend a book that was actually recommended to me by one of the viewers a couple of years ago, maybe a little longer ago. It's called The Mandibles, A Family, 2029 to 2047. It's by Lionel Shriver. I highly recommend it. It's fiction, but with what's going on in the world, it's becoming more and more likely that it could happen. And it talks a lot about what would happen in a dystopian world where everything collapses, where the dollar collapses. And it's a great read. I couldn't put it down. I read it in about 3 or 4 days, The Mandibles. So read this book. I think this could help you. So now to the markets. To the CPI number that we saw yesterday. CPI, of course, is the Consumer Price Index. It's a measure of prices. And we know, of course, especially if you've been watching my videos and been a follower of my channel for years, that rising prices is not inflation. Saying that rising prices is inflation is like saying that the wet pavement or wet sidewalk is rain, caused the rain. No, the pavement is wet because it rained. So it's the same thing. Prices are rising because we've had the inflation of the money supply out of thin air. The only reason why it's starting to seep through to consumer goods now is because of the Cantillon effect. They've been able, the powers that be, to keep the inflation flowing towards housing, the stock market, the bond market, and they've been able to keep prices of commodities subdued for many years, since 2011, I would say. And now that inflation's starting to flow through to commodities, consumer goods, everything that the majority, the general public really needs to survive. And so what we're seeing is not inflation, is the consequence thereof. So yeah, be careful when people say, oh, yesterday's inflation numbers. No, they were price numbers. And that's why it's going to get worse for the consumer prices. And they're going to keep saying that inflation is going to get worse. But no, we know already that we've had the inflation. So the way to protect ourselves, of course, is not to have many of these during an inflationary period, because they will buy less and less things. They've been buying less and less stocks of the Dow, of the NASDAQ. They've been buying less and less gold. And they're going to be buying less and less food, less and less everything. And the opposite of paper money, of course, is real money, which is gold and silver. Yes, gold and silver did try to go up yesterday after the number. Actually, initially when the number came out, they were hammered. Then they went back up and they were hammered again. So why is that? Why didn't gold and silver go up when prices, the published prices were a lot higher than expected? Because the CPI was expected to come out at, I think, 3.6%, and it came out at 4.2% year on year. It was expected 0.2 month on month, came out at 0.8. You would think that gold and silver would go up. Well, there's a couple of things I would say. A little bit of manipulation, but also algorithms and machines trading. They looked at the 10-year yield that went up maybe 6-7 basis points from 160 to 166, and they said, oh, that's going to be negative for gold. But if you look at the price of gold when yields topped back in March, around the same levels we're now, maybe a little higher. Gold was down to 1675. Now we're above 1800. So gold is actually performing well, and silver, despite the fact that yields are still elevated. And the reason for that is that the Federal Reserve, despite rising prices, which is showing that they're inflating too much, is going to keep short-term rates very accommodative, near zero. They've set it for at least another 3, maybe possibly 4 years. So they're behind the curve. And in the 70s, they did the same thing. You had a bear market in bonds, you had rising yields, but the gold price exploded in the 70s. So because real yields were negative. So if you take the 10-year yield, let's say at 1.7%, which is where we got to yesterday, and you take 4.2 from that, well, that's 2.5% differential there. You're losing 2.5% in real terms if you invest your savings in a 10-year when you're getting CPI rising by 4.2 minus 1.7, it's 2.5%. That's the real negative rate. And I expect that rate not to really get into positive territory, because the Fed wants to inflate away the debt, and that's how you do it, through a negative real rate. So I wouldn't be concerned with the movement in gold and silver. So with that, let's look at where we are right now in the markets. It's 8:28 a.m. London time. We've got spot gold at 19.50. It's up $4. The high's been 18.23 and the low 18.13. All considered, I think gold and silver are doing quite well. Gold, don't forget, just recently broke through the key 1800 level. You would think with all the volatility in the markets yesterday, especially in the stock market, that gold would have gone back below 1800. So the fact that it held 1800, I think it's pretty good. Silver is at 2702, unchanged. Range has been 2684 to 2726. The Dow future is down 77, so continue to trade lower. NASDAQ future is up 30 points. S&P is down 2 points. We're seeing the dollar yesterday rallied a little bit, which is weird. Higher prices. Maybe markets think the Fed is going to be tougher and rein in their inflation, but I don't think so. I think the dollar is going to continue lower. But so are the other currencies versus real things, of course. The paper game between fiat currencies is a little bit of a distraction, I would say. British pound is unchanged, 140.62. Euro is up 0.25%, 121.02. Dollars down slightly versus the yen at 109.61. Dollars down 0.1 at 6.45 versus the yuan. What about the Aussie dollar? Aussie dollar is unchanged overnight here at 77.26. The general commodities, we've got WTI crude down about $1 or 1.4% at 65. We've got high grade copper up slightly at 474. And the 10-year yield to finish off is down about 2 basis points at 168. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.